What if the next bank run doesn't start with depositors, but with AI talking to itself? This week, something unusual happened across North America. Central banks didn't talk about inflation, growth, or interest rates. They talked about artificial intelligence. In Washington, Jerome Powell and Treasury Secretary Scott Bessent called in the leaders of major banks. Days later, the Bank of Canada held a similar meeting with the country's biggest lenders. This wasn't routine coordination. It was a warning. The concern is not traditional hacking. Banks deal with cyber threats every day. The real fear is speed. A new generation of AI systems can analyze vulnerabilities, generate strategies, and act in seconds. Financial markets run on confidence. Not capital, not profits, but confidence. If trust breaks, liquidity disappears. That's how crises start. In the past, bank runs required people lining up outside branches. Then it became digital, with depositors moving money online. Now the risk is machine-driven, where systems react to signals before humans even understand what is happening. Modern finance is tightly connected. Payment systems, repo markets, derivatives, clearinghouses, and exchanges all depend on each other. When one part moves, everything else reacts. Imagine an AI system generating signals that look like a liquidity problem. Trading systems respond. Risk models tighten. Funding costs jump. Other institutions pull back. Suddenly, the system freezes. Nothing fundamental changed. No major losses, no recession, just a rapid collapse in confidence triggered by automated reactions. This risk is growing because banks themselves are adopting AI. They use it for fraud detection, liquidity forecasting, and trading decisions. That means AI signals can now directly influence financial behavior. Now, imagine AI attacks triggering AI defenses. Those defenses trigger AI trading, machines reacting to machines. Humans become observers instead of decision makers. This is how you get flash crashes, liquidity vacuums, and funding stress. Not over days or weeks, but seconds. Faster than regulators can respond. Central banks only coordinate like this when they see systemic risk. They are not worried about one bank. They are worried about the entire network. The challenge is that traditional tools are slow. Emergency liquidity facilities operate over hours. Market interventions take coordination. Communication takes time. But AI-driven stress moves instantly. By the time humans react, markets may already be frozen. That's why these meetings matter. This changes how future crises may look. They may not build gradually. They may appear suddenly. Normal conditions, then immediate stress. It also means regulators may slow AI adoption in finance. Expect tighter controls, audits, and manual override requirements. Stability becomes more important than speed. The biggest shift is psychological. For decades, crises were driven by credit, leverage, or inflation. Now the risk is intelligence itself amplifying fear. The Bank of Canada and Powell didn't meet banks because something already happened. They met because something new just became possible. A financial system where machines can trigger panic faster than humans can restore calm. And once crises move at machine speed, the rules of stability change. This is Macro Pulse, Global Notes by JP. If you found this helpful, comment, like, share, and hit the bell.